In this video we are going to talk about 10 dividend kings. So before starting this video, please like this video and subscribe to this channel for our future updates. A publicly traded firm is considered to be a dividend king if it has grown the number of dividends it pays out to shareholders each year for at least the preceding half-century. These businesses have a demonstrated history of maintaining a consistent dividend payment schedule to their shareholders. Imagine these as large corporations such as Coca-Cola or Johnson & Johnson. Number 10. Johnson & Johnson. The healthcare behemoth Johnson & Johnson may not only stand to gain from a global turnaround in the COVID-19 epidemic, but the company may also play a pivotal role in bringing about such a turnaround. J&J is the company with the most valuable stock among all of the vaccines, and it is one of the leaders in the market for coronavirus vaccines. During the pandemic, the business committed to selling its COVID-19 vaccine at the same price it paid to produce it. J&J does, however, have a number of other pharmaceutical items available on the market, which are contributing to the company's increasing profitability. The treatments for autoimmune diseases Stelara and Tremfya, as well as the treatments for blood cancer Darzalex and Imbruvica, continue to be very successful. In the year 2023, Johnson & Johnson intends to separate its consumer health unit into a separate company. As a result of this decision, the company will continue to focus on its more rapidly expanding medical device and pharmaceutical businesses. Number 9. Federal Realty Investment Trust. If the number of COVID-19 cases drops dramatically in 2022, it seems like a sure bet that Federal Realty Investment Trust will come out on top. More than 100 retail establishments are owned by the Real Estate Investment Trust, REIT. As coronavirus fears continue to subside, the company's tenants should enjoy improved financial standing. The likelihood of Federal Realty collecting a greater proportion of the recurring rentals that are owing to it will improve as a result of this change. If interest rates remain at their current historically low levels, Federal Realty should also gain. In order to finance the purchase of new properties, REITs typically take out loans. When interest rates are low, it results in a reduction in the amount these enterprises must pay in interest expenditures. Even after the planned increases in the interest rate, the levels ought to continue to be quite modest. Number 8. Cisco. During the worst period of the COVID-19 pandemic, the type of company that Cisco was one that many investors wanted to steer clear of. The pandemic has had a significant negative impact on a significant number of restaurants that are Cisco's customers, which lead to a decline in sales for the corporation in the years 2020 and 2021. On the other hand, a stock that is expected to surge once the coronavirus crisis has passed is one that investors should steer clear of during a pandemic. If this year Americans eat out at the same rate they did in previous years, Cisco should be in a good position to make a full recovery. When the pandemic is gone, the business could discover that its consumer base is more devoted than at any other time in its history. Cisco has made significant efforts to assist its restaurant clientele in overcoming the obstacles presented by the coronavirus, such as assisting them in extending the time they may serve clients outside and assisting them in revising their menus to increase their profitability. Number 7. Lowe's. Lowe's, a retail powerhouse in the home improvement industry, fared remarkably well even in the midst of the worst of the pandemic in the year 2020. Because so many people in the United States were working on improving their homes, the company's sales and earnings skyrocketed. In 2021, Lowe's continued to build on its previous success. It anticipates that its transition to a delivery model in which large, bulky products are transported straight to customers' homes from distribution centers would result in an increase in sales by the year 2022. This methodology will completely circumvent the company's storefronts. Home sales should continue to be robust so long as interest rates remain at or around historical lows. It is common for people who acquire new homes to need to make repairs to their previous residences first, which could result in increased business for Lowe's. Number 6. Stanley Black & Decker. The same tendencies that are beneficial to Lowe's are also beneficial to Stanley Black & Decker. These trends are working to the favor of both companies. During the pandemic, the company saw a significant uptick in sales of items that are utilized in do-it-yourself (DIY) projects. In a similar vein to Lowe's, Stanley Black & Decker's tool sales for the do-it-yourself market ought to continue to expand so long as financing rates remain low. The majority of people who start making repairs to their current houses in preparation for buying new ones will require various types of tools in order to complete these projects. After taking a significant impact due to lockdowns imposed during the pandemic, Stanley Black & Decker's other companies have likewise made a strong recovery. The acquisition of MTD Holdings, which is a manufacturer of outdoor power equipment, ought to result in an increase in the rate of the company's growth. Number 5. The ABM Companies Incorporated. ABM Industries is one of the largest providers of integrated facility services in the world. These services include janitorial services, engineering services, parking services, electrical and lighting services, energy solutions, HVAC and mechanical services, landscape and turf services, and mission-critical solutions. In addition, ABM provides these individualized facility solutions to real estate properties in a wide variety of business sectors, including commercial office buildings, schools, airports, hospitals, data centers, manufacturing plants, distribution centers, and entertainment venues, among other types of establishments. In September of 2021, the business successfully completed the acquisition of the janitorial services and engineering company Able Services. ABM will rely heavily on Able as a main growth accelerator heading forward, as the company's annualized revenue from Able already exceeds $1 billion. The fact that ABM Industries has maintained a pattern of annual dividend increases for the past 55 years makes the business a dividend king. Number 4. Altria Group. The Altria Group is a behemoth in the tobacco industry, and the Marlboro brand is its most famous product. However, in response to the long-term trend of declining smoking rates, the corporation has significantly extended its product portfolio over the course of the past few years. Altria has a number of different brands of smokeless tobacco. In addition to that, it operates a winery under the Assai Michel name and holds a 10% stake in the world's largest beer company, Anheuser-Busch InBev, Bud. Vaping and cannabis are the two additional product categories that Altria has recently targeted for expansion as growth opportunities. In addition, Altria has a stake of 35% in the electronic cigarette manufacturer Juul and a stake of 45% in the cannabis producer Cronos Group, CRON. Additionally, the corporation is in the process of releasing its own heated and vapor goods, such as the Marlboro HeatSticks and the IQOS. Both of these trends are making gradual but steady headway across the United States. Altria's traditional tobacco products are cash cows that enable the corporation to pay a high dividend yield of 6.5%. In the meantime, regarding the percentage of yearly adjusted earnings that will be distributed as dividends, the corporation has set a goal payout ratio of 80%. Number 3. Becton, Dickinson & Company. Becton, Dickinson & Company, also known as BD, is recognized as a market pioneer in the field of medical supplies manufacturing. The business was established in 1897, and it currently has 72,000 employees located in 190 different countries. The yearly revenue of the corporation is around $20 billion, with approximately 43% of the income originating from markets that are located outside of the United States. BD can be broken down into 3 distinct parts. Needles used in drug delivery systems and surgical blades are both examples of products offered for sale by the medical division. Products for the collecting and transportation of diagnostic specimens are offered by the life sciences section of the company. The intervention division now sells numerous of the goods that were previously manufactured by the BARD division. It is anticipated that BDX will become a dividend king throughout this year given its current dividend yield of 1.43% and its history of 49 years of consecutive dividend growth. Number 2. The Black Hills Corporation. In the states of Colorado, Iowa, Kansas, Montana, Nebraska, South Dakota, and Wyoming, Black Hills operates as an integrated and regulated electric and gas utility. Other states in which Black Hills is active include Wyoming. In addition to this, it serves around 1.3 million clients of various utility companies. All 3 of generating, transmission, and distribution are included in its assets. As a result of the highly regulated nature of the business, the management team at Black Hills anticipates long-term growth in earnings per share of between 5 and 7% on an annual basis, in addition to at least 5% annual increase in dividends. Standard & Poor's has assigned the business the credit grade of BBB+, indicating that the business is in a robust financial position. In point of fact, this has been a significant contributor to Black Hills reaching its goal of 50 years of consecutively increasing dividends, and the company's stock currently offers an appealing dividend yield of 3.3%. Because its dividend yield of 3.29% at the moment, Black Hills stock is now considered to be one of the dividend kings with the highest yield. Number 1. The Water Authority of California. The water utility that is owned by the state of California, California Water Service, is the third largest publicly owned water utility in the United States. The corporation has 6 subsidiaries that distribute water to around 2 million people. Most of these activities are located in the state of California, but there are also some that are located in the states of Washington, New Mexico, and Hawaii. The most recent dividend payout from California Water Service was 1.96%. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.